Steve Peterson here with Infinity Investments, and welcome to our channel where we talk all things commercial and investment real estate with the professional investor, developer, and broker in mind. And today we're going to be talking about California withholding tax. Now, if you're not in the great state of California, you may not know what I'm talking about. But if you're selling investment property in California without an entity, so you own an investment property in your personal name, and you are not doing a 1031 exchange, you may be subject to the California withholding tax. And wouldn't you know, that's a 3 1/3% of the purchase price tax. Now, this gets collected at the close of escrow by the escrow company, and it is a withholding tax. So after you file your taxes, you can get some, if not a good portion or all of it back after you do your taxes. But this is for folks not doing a 1031 exchange. And I've had this happen where, people, I'm not exchanging. I know I got to pay capital gains tax. Talking about the withholding tax. And they're like, what? The withholding tax? What you mean, Steve? What are you talking about? Well, that's the 3 1/3% that the state of California, the Golden State, is going to be charging you. And they're good at that, right? And so if you're exchanging, no problem. But if you're not, then you may have to pay it. Now, there's $1 million, that's, what is that, 33,000 and some change that you're gonna pay. Not a small fee, especially if, let's say for instance, you're not making a profit. Now, if you own a property in your personal name, you are subject to that. In times past, when I've done deals, if people owned an LLC, they owned a corporation, then they didn't have to pay the withholding tax if they didn't do an exchange. Now, I've even seen this on a couple of times where people with LLCs are being asked to pay this tax. And there's a form that you fill out in escrow, I think it's the 593 form, where you have to, if you are saying, hey, I am not making a profit on this deal, then you got to fill out the form and show that you're not making a profit on it. And then if you're not going to have to pay taxes. So what does that mean? What does profit really mean on a building? And I have to ask this question because a lot of people just don't know. And it has to go with the basis, the selling price of the property minus all the cost of sale, minus your basis. And your basis, you want to talk to your accountant or tax professional to really figure out what your individual basis is on your property. Because there's what you paid for when you acquired the property, then any major capital improvements that you put into the building. So if you did major renovations, that goes into your basis. But what also comes out of your basis or lowers your basis is the depreciation write-off that you are probably taking on your taxes every single year. And that's why you need to talk to whoever's preparing your taxes when you're selling an investment property, really before you list the property, but certainly once you're in escrow and you're figuring out if you're going to exchange, or if you say, hey, I'm not going to exchange, and you have capital gains taxes to pay, you may have to pay the state on top of that. And but here's the caveat: if you are breaking even, or if you're taking a loss, you don't want to have to pay that withholding tax. You shouldn't have to pay that. So you need to fill out this 593 form and show that you're not making a profit. So you have to calculate your basis accurately. And this is something that a lot of people, mess up. And that's why you have to have when you own investment property, I don't think you got to be on the H&R block to get your taxes done. I think you need to have a CPA, or at least someone who is adept or has an understanding of investment property. And most of us are going to take depreciation on our taxes. It's a great benefit for real estate investing is that you get a depreciation write-off as well. Understand that does affect your basis, and it knocks down your basis a little bit each year. So just understand that when you're going to sell these properties, investment properties, first of all, you should have them in an entity. LLCs, S corps, trusts. Again, talk to your tax professional, talk to your legal estate planning person. But all things considered, you should be owning investment property in some sort of a business entity, especially in the state of California. People want to sue left and right. You need to have the right business entity set up. However, so many people still own these properties in their personal name. So when it comes to this California withholding tax, you need to just be aware of that going in. I think the biggest thing as a broker and as an investor, but as a broker advising people, is to let them know what they're facing up front. And a lot of times it's not what you think. And if you take the time to do the numbers, almost certainly, if you're going to make a profit, I think doing a 1031 exchange makes the most sense, especially if you're going to repurchase or buy more real estate. But I know professionals in the business who sometimes they exchange, sometimes they don't, and for different reasons. The key is to let the numbers help you to make that decision. And one key number that consistently gets missed is the California withholding tax. So just make sure in this great golden state that we're in, if you're in this state, and you're preparing to sell your property, which a lot of people are saying, hey, I want to take my money out of California and go elsewhere. Understand there's a cost to doing that, especially if you're not exchanging. Now, I think you ought to be exchanging, all right? And that eliminates some of the stuff we're talking about. But if you're not exchanging, then you need to understand that you may have to deal with this tax. Because if you're making a ton of money, you're in capital gain, which a lot of y'all are, benefit of owning in California is we got huge appreciation. So if you're making that huge appreciation, yes, you're going to pay the capital gains. And if it's in a personal entity, if it's not in a business entity, it's in your personal name, yes, you're going to pay that California withholding. If you're breaking even or if you're taking a loss, please do not pay that tax. Take the time, consult with your tax professional, fill out the form, the 593, and make sure that you don't pay additional money that you don't have to, right? Why pay something that you shouldn't be paying? And that is only if you are dead set on not doing an exchange. Now, this video, I hope this was helpful. I hope somebody out there sees that and you're able to address that before close of escrow. Please, that's my wish for this video. I hope it was helpful. Throw me a like, subscribe, tell me I'm crazy, but let's stay engaged and let's continue bringing value to the commercial real estate space as we're entering into the post-pandemic. Can we say that yet? Post-pandemic? This is what, July 2021? I don't know if it's post yet though. But at some point, it is going to be the post-pandemic. And I think we need to be really, really have elevated minds in terms of how we deal with some of the issues that are in front of us. And this commercial real estate is the best industry in the world, and we got to keep doing what we can do to bring value to it. So thanks a lot. You guys have an amazing day, and best of success to your investing career.